Hello, everyone, and welcome to the Suzanne and Sarah YouTube channel. I'm Suzanne.
And I'm Sarah.
And today we are going to talk to you about 1031 exchange. We're going to give you the top 10 questions answered. We'll share about 1031 exchange rules, the timelines, and the entire process so you know what this whole thing is all about. Hello, everyone. Welcome to the Suzanne and Sarah YouTube channel. I'm Suzanne Moore.
And I'm Sarah Willis. We are Central Oregon's investment and real estate experts.
As I said, I'm Suzanne Moore. I'm a realtor here with Realty One Group Discovery in beautiful Bend, Oregon. I'm also the founder of the Central Oregon Investor Network, which brings together investors from not only just Central Oregon, but all over the country to share resources, talk about different real estate investing topics, and help each other create more freedom in our lives through passive income from real estate investments.
And I'm Sarah Willis. Suzanne Moore and I are a team at Realty One Group Discovery in Bend, and we make tons of useful content week after week on investor topics, on Bend lifestyle topics. We put out a weekly top picks email. All of these things you're going to want to stay in touch with if you are interested in the Bend area market or investing in general. We have a QR code here on the screen. Please screenshot it, hold your phone up, give us your contact information, and we will get you signed up so you have all of this coming straight to your inbox in a non-spammy way. We also would like you to like and subscribe to this video before it's over, and we hope you enjoy what you're about to learn.
All right, so let's dive in. What is the 1031 exchange all about? You've heard about this. People talk about 1031ing their properties, and you're like, what are you talking about? Well, first of all, I'm going to give you a disclaimer. We are not tax experts. We are not 1031 experts. Please consult those experts. We would be glad to connect you to a variety of people in both of those professions. That is what we are here for. We are sharing very general information about the 1031 tax deferred exchange. So let's dive in.
First, we're going to talk about the definition and what it actually means, right? So 1031 is the section of the U.S. tax code that deals with the sale of investment property. And there are some very specific terms you need to know in order to get through this process. When you sell your property, the term we're using here is we are relinquishing the property. And when we buy our property, we're replacing it with something of like kind. We have a certain number of days to do this. This all adds up to be legal tax deferment, okay? So basically, you are potentially making a profit from a house, and if you were to not replace it, you would have to end up paying taxes on the profit. This is just a way to kick that down the road and be able to pay taxes when you finally don't replace it or want to cash out, or just keep reinvesting your money time and time again without the tax burden.
So question number one about 1031 exchanges. What does 1031 mean? Well, Sarah talked about this already. 1031 is the actual section of the Internal Revenue Code that talks about selling investment property. So it got a little quick nickname of 1031. And as we said, it is about legal tax deferral. It is about taking your profits from your relinquished property, the property you sold, and reinvesting them into your replacement property without having to pay tax. And this is fully legal, allowed by the IRS. And we're going to talk to you about some of the details and processes to make sure that you know how this all flows.
So we're going to ask ourselves, why do investors use a 1031 exchange? Well, the main reason is when you sell and buy at the same time, it equals an exchange. So this is what equates to that 1031 term. You can sell an investment property and buy another one while deferring any capital gains taxes that would normally be due upon the sale of the property that you sold. So again, like we said before, we're kicking this down the road, the time and the potential to pay these taxes on the profits. So what this means is you can reinvest all the profits from the sale of your previous property into the new one and leverage that money instead of paying the IRS. Again, all legal. There are a lot of other reasons that investors use a 1031 exchange that we will cover in another post.
So big question, what are the rules of the 1031 exchange? We are going to run through a few of the rules. These are not all of the rules. Again, we are happy to connect you to experts called 1031 exchange accommodators that can give you the rundown of any scenario you could dream up about how this can work. But we're going to give you the general rules. So first one, same owner. Title must be held in the same name for the relinquished property, the one you sold, and the property that you're replacing it with, because it all has to be the same person on the tax return. So same person or same LLC or corporation or trust. You can't have a property that is in a different name and then buy a new property in a different trust. Doesn't work. Same name. Stick to it. Investment property. The property must be used for business purposes. It cannot be a personal residence. We'll talk about this a little bit more. U.S. only. With very few exceptions, you can only use a 1031 exchange to buy and sell investment property in the United States. Use it or boot it. I'm going to talk to you about one of the other really important terms to know in 1031 exchange land, which is the difference of what your relinquished property sold for and what the new property costs. So when the value of the replacement or new property is less than the value of the property you sold, the difference is called the boot. Boot. I don't know why it's called the boot, but it is. So since not all of the profit from the sale was used to buy the new property, you have to pay tax on the difference. You have to pay tax on the boot. It's really, that's the main thing you need to know is if you don't use it all up, you got to pay taxes on it. Mortgages. Mortgaged properties can be used in 1031 exchanges. In order to ensure that you defer all of the tax on your profits, you have to have a mortgage on your replacement property that is equal to or higher than the mortgage on the property you just sold. Otherwise, you pay tax on the boot. Money handling. You cannot touch this money as a person. This money cannot enter into your bank account and go back out. If that happens, 1031 exchange is null and void. Instead, there is what is known as an accommodator. This is an intermediary that handles all of the money during a 1031 exchange, and the investor never touches the money. Otherwise, you're paying taxes. So the investor will have to pay the accommodator a fee for helping facilitate the 1031 exchange. Last one, related parties. We'll talk a little bit more about this in a few, but you can do a 1031 exchange between related parties. So your family, your spouse, corporations, LLCs, things like that. But there are extra rules around these types of transactions to make sure that they are done legally.
All right, number 4, what are the timelines? There are some very strict timelines around the conventional standard 1031 exchange that you have to keep in mind. So this is an expedited process. As soon as you sell your original property, you have 45 days from the closing date of that relinquished or sold property to identify up to 3 new properties. So identifying them basically just means using your facilitator, placing those properties in front of them, and you have the potential to buy those places within 45 days. So next big number is you have 180 days from the closing date of that relinquished property to actually close on that property. So within that 45 days, you need to have identified which one you were going to offer on, place an offer on it, be in your diligence period, and then have closed it by the 180 days. No exceptions. Holidays, weekends, weather, illness does not change these timelines. They are hard and fast.
So 1031 exchange is also called the like-kind exchange. What does that mean? So like-kind exchange means that it has to be exchanging one investment real estate. Let me start over. So what like-kind means is that you're exchanging one investment property for another. That doesn't mean that they have to be the same type of investment property. And I'm going to give you some examples. You can sell a single family rental that you've had rented out and buy a commercial building that has a restaurant or a coffee shop or whatever in it. You can sell a huge apartment building and exchange that for land. You could sell a duplex and buy a strip mall. So all of these things are just exchanging investment property for a different kind of investment property. Or you can do single family rental for single family rental, whatever you want to do. It's just got to be investment property.
We already talked about this a little bit, but you may be wondering, can I use the 1031 exchange to buy a home I plan to live in? I know you know the answer. Well, off the bat, the answer is no. You cannot use a 1031 exchange to buy your personal home right away. There's a little bit of a workaround here. What you can do is you can use your exchange to buy a single family home as a rental. You can rent it out for 2 years, and then you can decide down the line to move into that home. So there's a way to get into one of your own investment properties as a private residence, but it does take a little bit of time and a little bit of calculated action. So remember to ask your experts.
Family matters. You probably are curious, can I buy a property from my parents or sell a property to my kids or my brothers and sisters? Let's talk about it. Generally speaking, you can buy and sell and do a 1031 exchange with a family member or a business partner. However, the IRS has caught wind of people taking advantage of the 1031 exchange, and so now they've put in some holding rules to make sure that folks are not shifting their basis before they quickly sell the property. And if you don't know what that means, don't worry about it. Basically, what you do need to know is, yes, you can sell property to people that you know, or you can buy from people that you know, but you have to hold it for 2 years before you can sell it again. So again, ask your experts for details and to give them your personal scenario and get expert advice.
So we're getting into the idiosyncrasies here. You may ask yourself, can I buy more than one property with my 1031 exchange? Real estate is a great investment, as we all know. Money grows here. You may have cashed out on an investment property and have enough to buy more than one place as a replacement property. The answer is yes. You can buy more than one property and replace your property with more than one, but it really just comes down to the values and making sure that what you're paying cancels out your boot. Naturally, income and real estate investment income causes you to level up. It grows your money, and you may want to buy bigger and bigger and or multiple properties. But yes, you just have to pay attention to how much your income liability or your profit liability is, and make sure that you are using it all up.
Next question. Can I buy a cheaper property than the one I sold? So you can buy a cheaper property than the one you sold, but you're going to pay capital gains tax on the boot. Remember, the boot is the difference between the profit of what you sold the property for and the price of the property that you're buying, right? Another option would be to buy 2 or more lower priced properties to cover the entire value so that you can fully defer your capital gains tax.
Profits and mortgage. You may be asking yourself, can I just reinvest the profits and not get a mortgage on the loan on the new property? Well, it really doesn't work that way. The goal of the 1031 exchange is to keep the real estate economy flowing. So doing that would be quite the contrary, right? So the rules really require that you replace the new property with equal or greater value to the relinquished or sold one. If you owned the sold property, the relinquished property outright, then you can buy a new property outright and not get a loan. But if you did not, then you are required to. So you can also use private financing instead of a bank loan. So keep that in mind as another option if the seller will finance the replacement property, or if you have another private lending source under your belt.
All right, that was a lot of information about the 1031 exchange. We hope you feel like you have gotten clarity on how this all works, on some of those curious questions that we all have about how to save on taxes. And I'm sure you're also wondering now, like, okay, what's next? Well, as we said at the beginning, we are here to connect you to the experts. We can connect you to tax experts and 1031 accommodators in Central Oregon and beyond. So if you are not in our Central Oregon area, call us anyways. We have connections all over the country. That is part of being in the Central Oregon Investor Network. So thank you very much for joining us today for the 1031 exchange top 10 questions, where we discuss the rules, timelines, and the process. I'm Suzanne Moore.
And I'm Sarah Willis. We are those connectors that put the people with the place. So when you're ready to do your 1031 exchange, we are the folks you're going to want to call, and we will help you stay within those guidelines that we discussed today. Once again, please screenshot this QR code. And we will keep you in touch with us on a regular basis. Please like and subscribe, and we'll see you on the next one.
Thank you, everyone.